Hi, our market just went red. And if you want to see a little bit more about that, you can watch my weekly market update available here on YouTube in our free newsletter called Insider Tips. But if you want to figure out a way to play this market, because the market has a propensity for the downside when it's red, you can make some good money. Now, I'm not saying you run out and short. I'm saying this is where maybe you start your research. So I'm going to give you a list of stocks that are ripe for being shorted. And I'm going to talk about two of them specifically. And if you want to know the other ones, you got to go subscribe to our insider tips. It's kind of my little bribe to get you to subscribe. And by the way, that's cashflowmachine.io/tips. Just subscribe, name and email, and we'll start sending it to you. But you'll get so much more with that. You'll get weekly updates. You'll also get our stock lists, our watch lists, our industry sectors that are strong, that are weak. And then today, we're giving you a short list for you if you want to make money on the short side. Now, on the short side, stock markets move down about twice as fast, sometimes a little faster, than they go up. So we've been in a 7-month run here where it's been green for basically 7 months, all the way from November up until now. Now things are turning, right? So the people are taking their profits, and that leads to more people taking their profits, and the market starts to cascade down pretty quickly. If you've been in the market for the last couple of weeks, you've probably been feeling this a little bit. There's a lot of distribution going. There's about 7 or 8 distribution days on the big indexes right now. So you've got to be careful of distribution. That means the big money is getting out. And when they get out, they send the markets down. And there ain't nothing we can do about it, right? It's the big market, the big money that moves the big markets. So we've got to remember that. All right. So let's talk about some of the stocks that we have. And again, I'm going to hide some of these because I want you to subscribe to Insider Tips. It's so much easier to go to one spot. But I am going to give you some, my 2 strong ones from the list. And then the other 13 you can go check out on the newsletter. So the first one is called Roblox. So we're going to talk about Roblox in just a second. And then there's another one here that we'll talk about right after Roblox. So let's take a look at Roblox's chart. Now, Roblox is a kind of a game designer, more for kids. I know kids are kind of addicted to Roblox in a lot of cases, but if you look over here on the left side, you can see they've got declining earnings, right? Those red numbers from 2021, they don't look like they're doing too well, right? And then you look at this debt, they've got huge amounts of debt, and then the chart reflects that. So taking a look right now, they're in a big, long, basically year-long consolidation. The stock is just above the 200-day moving average, not quite above the 50, and it's kind of stuck in that no man's land, but it's got a triple top going on. A top here, all the way on the left side of this consolidation, a top here in the middle, and a top there. That's a triple top, which basically tells us every time it tried to get to that spot, it couldn't break through. Even if it does break through, you have to go to this spot at about, 54, 55, and there's another resistance spot. So there's a lot of work this thing needs to do to go up. And it's reflected in the fact that it's got a 29 relative strength, which is pretty lousy compared to 99, which is the maximum. So it's performing worse than about 70% of the stocks in the market. This, to me, this is a good short setup. Lousy earnings decline, huge debt, and then you've got a company that just can't get out of its own way when it's trying to break through the resistance. And so when it doesn't break through the resistance, it's like a ping pong ball bouncing off the ceiling. It goes back down the other side, and it does it usually pretty quickly. So I think you can look for the first spot to be the 200-day moving average, around 37, 38, whatever that number is. And then if it breaks through that, it does it with volume, your next number is looks like about 25, 26. So that's where this thing could head, and it could head there in a hurry. And with the fact that it's not a very strong stock in the S&P 500 or compared to the S&P 500, it might go down fairly quickly. You can see that if you look at the left side of the chart back in 22, it went down fairly quickly, and it still has not recovered from that high. So you've got to be careful on Roblox. You got to put your stops in that if it goes above the 50 or some level around there, you've got to be ready to buy it back, because otherwise it could go up and really crush you. And some of these short plays can really hurt. So just be careful if you're going to short anything, especially a company in the tech sector like Roblox. But to me, the probabilities favor you since the market is red right now. Now, I always say this. This is a probabilities game, right? We don't know if Roblox is going up, and we don't know if it's going down. It's all about probability. So when you have the market that's red, that means 70% of a stock's direction comes from the direction of the market. If you're trying to buy a stock and the market's going down, it's like a salmon swimming upstream. So you want the market to be coming down if you're going to be short. So that's my first one. The next one is this one here. That's UPS. Now, UPS is a larger sector play, and look at this one. This one's been in a downtrend for a couple of years. That's telling us that, that people don't think it's doing that well compared to what it could do in the market. And you can see that In the negative earnings growth here in 2023, 24, maybe 2025, it's going to do well, but that's next year. So right now it's trading based on declining earnings, and you could see that reflected in the stock chart. And so you could see it's bounced up at the 200-day moving average, couldn't hold it. Now it's below the 50-day moving average. It's gonna have to hold this 140, and if it doesn't, it goes to this 138 level. But boy, if it doesn't hold that 138 level, or it goes through that on volume, which it could do in a red market, then you're looking at a stock that could go down to about $81, $82. That's where the next support level would be, somewhere down, all the way down here. That's a big decline. So to me, when a transport stock is showing this, that's showing that the market thinks that the market's going to be weak. And so if the market's going to be weak, people aren't going to be buying goods. They're not going to be moving money around. They're not going to be moving things around. They start to sell off all of these big plays, like, the logistics companies, FedEx, UPS, and some of the trucking companies. So that's why this one looks good. All right, I got 13 more on this list. If you want to see them, subscribe to Insider Tips, cashflowmachine.io/tips. And you'll get all the rest over there and all the other goodies and stuff too. Listen, I like putting these videos together. So if you haven't subscribed to the channel, that would be great. Subscribe, hit the notification bell so you get it as soon as it comes out, because it is a stock market. These do get stale after a week. And hit the like button as well, because that'll tell the algorithm that you like this video, and it'll serve up more to you just like it or similar to it, and help other people as well. So hopefully I'll see you on the next video. Take care.